The first chart that I'll open up today is that of Nifty Midcap 100. This is relative strength. This I'm seeing against Nifty 50, which is the benchmark large cap index in our market. So Nifty 50, if you see with respect to Midcap 100, that is Midcap 100 is now attempting to outperform Nifty 50 overall. It's now above 50 DMA. I think a lot of you who trade in the market, invest in the market, you should begin looking at small caps and mid caps again. These indices have been underperforming for the last year or so. But I think these indices, the broader market in general, is getting into a very bullish kind of a structure. Nothing that we haven't been discussing ever since the market bottomed out in March 2025. I've always maintained that Indian market is bullish. It is just that you're not seeing too many wide range candles, which gives you an illusion that the markets are not strong. Markets are exceptionally strong. They're digesting all negative news flow. And despite of that, it's moving up. On Friday, we've gotten one more news flow with respect to H-1B visas. There'll be a lot of noise around this. Ignore it. I'll come to the IT sector towards the end when I start covering up all the ETFs, but there is nothing wrong in Indian market or global equity market per se. In fact, over the next 4 to 6 months, I think India will outperform a lot of markets, including China also, for the reasons that I've explained in the previous video that I did about the obsession with FII data. On a higher time frame chart, if you look at the Nifty Midcap Index, this is nothing but a cup and handle structure that has just got validated. Now, cup and handle does not mean that the price has to move in a momentum kind of a manner over the next few months. It just means that the overall structure of the index is bullish, and you should be looking for buying into this particular space, whichever pockets, whichever stocks you understand. I of course cannot directly talk stocks, but obviously I'll be guiding you towards the pockets that you need to look into. So this is the broader market space which continues to remain bullish. If you look at Nifty 500 index, again, the structure is same. This is again a cup and handle that has just got confirmed on a higher time frame chart. So whatever negative news flow that the market is witnessing over the last 6 odd months, it just consolidates for a few days, it digests that news, and it just keeps heading higher. The same thing is going to happen with the H-1B visa news also. I'll speak about that more when I come to the IT sector. But overall, whatever is happening in the US and the world is super bullish for India if you have a different perspective to look at things. Then comes Nifty Bank. This becomes extremely crucial in the very short term, because if IT sector is going to see more outflow in terms of FIIs selling positions, DIIs offloading some positions, retail selling some positions, then you will need a heavyweight sector to support something like a benchmark Nifty 50, Nifty 100, and financial and the banking sector is what you can think about. So we have just moved above 50 DMA. This is a V-shape kind of a move, not a healthy move as such. So it would be good if we consolidate some more time, let's say in this particular range, and then stage a breakout. So let's say we consolidate here and then take out this particular pivot. You never know in the very short term, to counterbalance the effect of IT, we may just get a pop-up very soon, because the underlying tone of the market is bullish and you're seeing some money coming in. People are looking to buy. That is always a positive sign. But this particular pivot is what I want to be taken out in terms of technical perspective, so that price can find it relatively easy to move up. Now, one by one, I'll go through the sectors. Now, because on regular indices sectors, we cannot check volumes, I'll be opening up the charts of ETF. I have, based on my own understanding of price and relative strength, ranked these ETF in order of strength. So whichever ETFs I'm covering first are the strongest in the market, and whichever I'm covering in the last are the weakest. So when it comes to the availability of all the ETFs, I think the strongest ETFs in the market today are Hang Seng Bees. This is something I discussed about 1 month back when I did an ETF update. That time, I think price was around here. We've had a fantastic movement in this. Then the tech sector of China. Again, this is a Mirror Asset ETF. Not entirely that liquid, but in terms of trend strength, obviously these ETFs are very strong. Then, of course, comes the silver bees and gold bees. I think in the very short term, gold is extended. Gold is in a multi-decade kind of a bull market. The first time I had spoken about this was in Russia and Ukraine war, why gold would have benefited tremendously in years to come. I don't think that move is over. That move will go on for some period of time. But I think gold now needs a serious pullback to something like a 200 DMA. So if you're someone who's missed out on gold, or let's say I'll put it this way, if I'm someone who is looking to invest in gold, I will only do so if gold has a 10%, 15% kind of a pullback correction. Else I won't let it go. When it comes to our Indian market, auto Auto sector is something that is really benefiting from the recent GST reforms, and I think this move is just not over. For those of you who don't understand stocks, who are really poor at picking stocks, you should look at ETF space, because this directly gives you a measure of the strength that is there in a particular pocket, and then you can benefit from it. Just in a bit, if I have to cover stock, let's say in auto sector, I can't open up the chart, but I'll tell you, take a snapshot of this particular chart, exactly replicate it to your stocks, which means in auto sector, look at those stocks that are forming this structure, moving up, relative strength shooting up. That is your stock. It's as simple as this. It is just that focus on those companies that are relatively smaller, let's say between 3,000 crore market cap, 30,000 crore market cap, between this number. Then you'll find some smaller auto companies that are likely to benefit more when you compare it with the likes of heavyweights like Maruti, Tata Motors, Mahindra and Mahindra, TVS. It's not a recommendation, I'm just giving an example. Always look for smaller companies. Next I would place is defense. Defense has again started moving up. This is a sector I've spoken about many a times in the last 6 months. And defense sector, if you look at these couple of 2-3 candles, this absorbed the selling of the last 40 odd days. You have to look at defense when it comes to the Indian market. Too many times I see criticism on social media about our ecosystem, about our industries, about some people making fun of our IT companies going for buybacks instead of investing in AI. Everybody is entitled to their opinion, but I have a different view of looking at it. When the AI boom is happening in the US, look at what in our country can become the next big theme. It need not be AI. You don't need only AI to make money in the market. Our defense sector, our capital market sector, probably our EV market, whatever limited things we are doing in the EV market space, that in itself can become a huge space. This is something I tweeted about also. So don't be obsessed with some global theme that is playing out. By the way, defense is a huge global theme and it is not going to go away because of the kind of polarization that is happening in the world. And it's clearly visible. So this is a mega theme that is here to stay. Then I would rank the capital market. Again, I've heard a lot of comments about this particular sector being in a bubble and those kind of things. It may be, I don't know, but I think capital market has an amazing opportunity in the next few years. And whatever I speak about in videos, it is always about medium to long term. I'm not interested in short term at all. Capital market, the more number of players get listed in this particular space, the more consolidation is going to happen in years to come. A lot of smaller names will be absorbed. And then we will have some 3-4 large players in this particular field. So be on the lookout of all the companies that are getting listed in this space. Even from a medium term point of view, you will get some fantastic investing trading opportunities. Then I will place PSU banks. PSU banks, again, for those of you who are interested in valuations, PSU bank is one of the cheapest pockets that is currently available in the market. And yes, you can have a counter argument with respect to bureaucracy, with respect to government and XYZ things can happen. That is absolutely true. But the same thing was true for the defense space, certain pockets in the defense space. Same thing was true for the railway bull run that we saw between 2020, 2023. So there are always themes. PSU bank is a theme that is dirt cheap today. So if you're a numbers guy or a quantitative guy who looks at fundamental analysis, those kind of things, look into this space. EV ETF, this ETF I think again is from Mirai Asset. Again, you're seeing this ETF coming down from 36 to 24. It has formed a base. It is still very close to it. And this is a space that caters obviously to a sector that is going to see a lot of demand due to GST. Then I'll place the entire IPO market. There are some fantastic companies coming out in the IPO market also. Do not ignore those companies. You may not get a lot of allocation in IPO. Don't be blind and chase every IPO, but the companies that are getting listed whose services you use, why don't you just try and understand what their business model is just for the long term? And don't go by this valuation kind of a number that is thrown around on television and social media. Yes, valuations are exorbitant when it comes to these newly listed companies, but it does not mean that you have to hold on to these companies forever. Even if you hold on for 7, 8, 12 months and you get a decent return, that is a job well done for you. Then I'll put the consumer bees or consumption bees. This is the Nippon India Consumption ETF. Again, you have to look at it if you are looking for playing in sectors that are going to benefit due to a expansionary fiscal and monetary policy that is currently going on in the country. So autos and consumption are going to be a big beneficiary. Then the dark horse, that is the metal ETF. Now, metal is something that I'm super bullish on. It is just that currently the market, while the relative strength is improving, you're always seeing some kind of retracement coming in this sector, and it again gets stuck in the range of 8.8 or 9 or that level. But from 12 to 18 months point of view, I'm super bullish on this sector. It's not an investment advice. It is just something that I think will play out positively in this particular space. Also, some of the themes to look at within the health space. Again, can you see what is happening here? Run up, consolidation broadly is happening at the same level. This is nothing but a long term accumulation going on. Within the health pocket, also, you have to focus on hospital groups. There are some specialty hospitals that have come up. There's a specialty hospital for heart health, for dental care, for eye care, that is for your eyesights. And we are, due to our current lifestyle, we are seeing a rapid rise in number of cases when it comes to dental care and eye health care. Also look into these pockets. There are some niche companies listed here, but if you don't understand all that, you have the health ETF also. Now I'll go to those ETFs that are currently not doing well. Obviously, the first that comes into the mind is ITBs. Now, the recent move by President Trump, I think yesterday, was putting some a fee hike. I think 10 times or 20 times. I don't remember. 100,000 per application. I didn't go into the details, but it is going to deter a lot of companies, and supposedly 70%. It was beneficial for Indians. See, think in other way. Okay, is this going to impact the IT sector in the short term? Yes. But always remember, good news and good price will never come together. Today, IT sector is down 20 odd percent. I think Monday, Tuesday, you can get another couple of 3-4% kind of gap down. But IT sector, I have tremendous faith on this particular space. It will adapt, it will evolve to the changing times. Now, coming to the H1B visa issue, I think this is super positive for India. It is super positive for India because a lot of brilliant people from India always look for opportunities to move abroad. Of course, in anticipation of a better lifestyle, that is fine. It's everybody's personal choice. But if the process of getting abroad, let's say investing a crore or 1.2, 1.3 crore based on whichever universities these kids get admission to, the cost of living, etc., etc., if that is going to shoot up so much, plus the uncertainty about job prospects, then at least some of those brilliant people are going to stay back. Yes, our ecosystem is not great. Yes, our ecosystem has fair bits of challenges in terms of bureaucracy, in terms of ease of doing business. But always remember, brilliant people will find a way. That is the way of life. I don't remember who said it, whether it was Gautam Buddha or somewhere else that I read it, that there are only two kind of people in life, and that is something that has stayed with me since I read that. There are only two kind of people in life: one who complain, and the second one who find solutions. So most of the brilliant people, or people who are blessed with a lot of intelligence, a lot of common sense also, every problem that they come across, they always seek a solution to it. That is how India is where it is today. Given the kind of ecosystem that we have had in the last so many years post independence, even in the last 25 odd years, still you are seeing so many fantastic companies coming up, giving job opportunities to people, and they're helping India where it has reached today. So if more talent is retained in our country and brain drain does not happen, these kids who are blessed by God in terms of intelligence, in terms of changing lives of people, if they stay back, that is going to be super positive for us. And our IT companies will find a way around this H1B thing also. So yes, if somebody is a long-term investor, long-term trader, then I think a really strong base for you is this one. In the near term, there is one base that I'd marked on X, which is this one. So I don't see anything wrong with IT sector as such. It is just that it's going to take a little bit time. That's all. The second sector at the bottom is realty. Now, real estate obviously did really well between 2020 2023. After that, we've entered a dull kind of a phase. Real estate demand also has slowed down. But I don't see how real estate won't perform along with auto and consumption. See, whenever government and RBI, they get into a fiscal expansion kind of a cycle, and towards RBI, monetary expansion kind of a cycle, these three pockets, which is realty, auto, and consumption, they will always benefit. It is just that real estate today is digesting that move. It will set up. And ultimately, all these sectors, because of a expansionary monetary and fiscal policy, the benefit goes to the financial space. That is why the top performing sectors for me today are defense, capital, PSU bank, of course, auto consumption, and the entire BFSI space. There is no way these sectors are not going to do well and the market is going to move up. All right. Again, some of the sectors that I've placed at the lower end, this is the PSE space. Then comes the internet, which is very close to the digital space. The internet ETF is again Mirror Asset ETF. Private banks, though they are in a good structure, but as of now, they are underperforming. After the bump that you saw in April, they have gone into an underperforming kind of a cycle. Although the top three private banks are exceptional in terms of performance. Yes, the growth is relatively slow, but as soon as the credit cycle will pick up, and it will pick up, these banks will be the banks to watch out. All right. So this is how I have placed in the pecking order in terms of the performance of ETF and which ETFs you should be looking into. A word for those who want to identify stocks. Let's say they want to go behind the best stocks in the defense sector. Look at the stock which is currently above 50 DMA, rising, where relative strength is clearly rising. Should be your pick. And not all sectors, all stocks that is in defense sector are doing this. There are a handful of stocks today that are moving before the defense sector, before this range got formed. All right. Now, a couple of minutes on market in general. See, for the time being, whatever we have discussed over the last 6-7 months, market currently is moving that way. That is climbing the wall of worry and moving up. Even the last video update that I did, where I think Nifty was here, it was difficult to see how 1,000 point rally can play out in the market, and yet it did. The message from the market is simple. Whenever there is negative news flow, you will extrapolate that in terms of a potential market fall that is coming. It is not your fault. It is the ecosystem that we are currently into, where you will find thousands of people writing about a market crash on social media, making videos on YouTube, and you know what goes on. But in reality, I think, and again, I will repeat this, no if and but, I think our equity markets are heading higher. I remain super bullish on stock market. Use this opportunity. You obviously have your risk management rules if something were to go wrong. As an experiment, look at what is happening today around the H1B issue. Every media outlet, whether it is on social media, these big influencers, these big handles, they are tweeting and writing about it without understanding the core issue, because that is what drives eyeballs towards their accounts. That is what then drives sponsorship. That is what then drives a lot of revenue towards them. Now, this is detrimental to you. It is detrimental to you because you will always remain anxious, thinking that there is a potential crash that is going to come around the corner. So for that, you need to follow some basic things. Let's say you have bought into this particular move and you are sitting at 5, 6, 7% gain. You just have to mark out this particular pivot here. Touch your positions only when this level starts going. Else, whatever random news flow comes, it is nothing but noise for you. If you keep following headlines, you will never be able to follow price. Only those people are able to follow price who stay away from anything that drives short-term anxiety higher. You have to be calm. You have to follow the price levels. And then you have to be eternally bullish and optimist in this market. There is no pessimist in stock market who can get rich unless and until he forgets that he has invested something. There is no pessimist person out there who will ever get rich when it comes to the stock market. Only those people are going to make money in the stock market who are optimist, who see a solution when they face problems, and who stay away from any kind of medium that instills a sense of anxiety within. Our brain does not cope well with anxiety. Our brain functions very well when we are calm. This is the essence of life, and this will never change. Whether you're listening to this in 25, 2035, 2075, or 2135. Some things about human nature can never change. That is why being calm, maintaining your composure, having your risk management rules is the way out when it comes to doing well in stock markets. So have a great weekend ahead, guys. Take care and be safe.